Hello and welcome back to No Pants Profits. This is Richard, still coming to you with No Pants and hopefully profits. And today I want to talk about yet another IPO. We have talked about other IPOs on this channel, preferably Stronghold, which is a crypto mining company, as well as Vita Coco. Which as I said in my last video, I am not a fan of coconut water, but you know what? I'll do it for the community. I need a little drink before I do this, so just opening this guy up, some Vita Coco, got a little twisty lid. You know what? If I was on a beach or it was warm outside, it's kind of refreshing, but that's just a little taste of Vita Coco because I said I'm not a fan of coconut. I am, well, spoiler alert, if you want to learn about Vita Coco, you can take a look at the end. But today I want to talk about another company, a new company that's an entrant to the IPO market actually coming next week called Portillos. So Portillos is, well, it's probably not Spanish, but Portillos is a fast food company that makes hot dogs, beef burgers, and salads. I think for those of you that are watching, probably the closest thing to compare Portillos to, and I've been to Portillos, I say Portillos. Portillos to is kind of a cross if a Chick-Fil-A and a Five Guys had a baby. That's what you'd wind up with, is a Chick-fil-A and a Five Guys having a baby. But I do want to start talking about that, and I do want to go through their S1 document because I find that really useful to take a look at. So let's take a look at some PR on the company. You can see Portillos announces filing a registration statement for proposed IPO. And Bank of America and Piper Sandler are going to act as the joint leading it, and they are working. What we're going to do is we're going to go through the S1, but we're going to take a look real quick, see if we can figure out kind of what's going on. I will tell you, in the S1, I did breeze through it. I didn't look at all the numbers. It is currently owned and managed by Berkshire Partners, which I did a little digging and learned that that has nothing to do with Berkshire Hathaway, just to kind of research that beforehand. But Portillos is a restaurant chain, plans to raise up to $405.4 million with an IPO of its shares in a regulatory filing posted on Tuesday, so posted about 3 days ago. They're based in Oak Brook, which is up near Chicago. And they're going to be using the symbol PTLO, and are going to be around $20 a share. But I know why we're all here. Let us take a look at the S1. Now, we've already taken a look at the S1 of two other companies, one of them being Vita Coco, and one of them being, let me remember the name real quick. One of them being Stronghold Digital Mining, which is a power company that said, hey, I want to get into the crypto world. So today we're going to take a look at Portillos, and I have actually been to a Portillos before. I'm going to have a little more Vita Coco. So I've actually been to a Portillos before, and I want to talk about Portillos. We are looking at their S1 document, which is an official document that a company files with the SEC, and it's available. Not a lot of people know this. I will have the link down below, but it's an official document that a company files with the SEC when they want to go public. This document was filed on October 12th, so Tuesday of this week. Today is October 15th, so Tuesday of this week. Portillos Inc. It is in Oak Brook, Illinois, which is kind of a suburb of Chicago, Illinois. And we can see who they're sending it to and everything like that. But I want to really get into this because this is called fast casual fast food, and this segment of the market is changing greatly. I will tell you. They're going to be selling 20 million shares, and this is their preliminary prospectus, but they're going to be selling 20 million shares of Portillos. Involved in the underwriting partners, Morgan Stanley, Bank of America, UBS. Okay, we got some big boys involved here, but I want to talk about Portillos, and what you'll notice is they're really trying to give out, again, I skimmed this, didn't look at any numbers yet, but they're really trying to give out some Chick-fil-A vibes. Now, I have been to a Portillos before, when I was there before a Howlo Scream event in Busch Gardens in Tampa. They did just build out a location in Orlando. I am Florida-based. They just built out a location in Orlando that's done pretty well, but they haven't actually released any numbers on it. But again, if you look at these pictures, you're really getting a vibe of, and I get that vibe of, Chick-fil-A meets Five Guys. That's really what I'm seeing, is kind of a Chick-fil-A meets Five Guys. And you'll see they are mainly doing hot dogs and steak sandwiches and some desserts and some fries. But That's not why we're here. This is actually the location I've been to in Tampa, Florida, and the locations are designed unlike other. This is not really fast food. It kind of falls in a fast casual category. Kind of like if we're looking at big chains like a Chipotle, or really kind of falls like a Chipotle more than anything else. They care about the design of their restaurant. They kind of want you to eat in. I guess Chipotle is not the best idea, but it's fast casual. I'll give you an example. I actually did a study about 6 months ago for Burger King. And one of the things that Burger King was looking into, because Burger King's based down here in South Florida, one of the things that Burger King was looking into was actually closing the insides of their restaurants and being drive-through and Uber Eats and to-go only. So this is very different. This is creating the environment. It's trying to get you to want to eat there. So, if we take a look, I'm going to try and make these a little bit bigger so you can see, because it is, again, about the experience. Now, again, we care about the numbers. But Portillo's is kind of about the experience. So, like I said, I've been to this one in Tampa, Florida. The one in Tampa, Florida is actually designed to kind of look like a Chicago delicatessen. Let me see if I can find Portillos, Tampa. Images. So yeah, you'll see if I look at Portillo's, this is the one from Tampa. So you can really see it kind of looks like an Italian delicatessen. That's kind of where this is what I remember from the Portillos in Tampa. That doesn't look like your typical fast food restaurant, but it still kind of is. You'll see it's got the counter and it's got everything like that of a fast food restaurant. But back to the IPO. So they are home of the famous Chicago Dog and Cake Shake and Route 66, and kind of Portillo's, what they're selling is they're selling Americana. They're trying to sell Chicago's version of Americana, Route 66, everything else like that. They're saying, again, this is the marketing bullshit. High energy, multi-channel format. They do have a drive-through. Again, like I said, I've been to one once before a Busch Gardens event, and kind of rushed through it and got a steak sandwich. It was pretty good. Growing national footprint. So they are growing a lot. Again, happy, smiling people get obsessed. So that's their thing. Portillos get obsessed. It seems very much like a Chick-fil-A. But let's go ahead, because all I care about are numbers and risk. We're looking for things that matter here. Key metrics. Same restaurant sales. Same restaurant sales is the percentage of change in year-over-year revenue, excluding gift card breakage. So that's if you sell a gift card is not recognized as actually sold until someone actually spends it. For the comparable-based restaurant, which is defined as the number of restaurants for at least 20 that have been operating for at least 2 years, Portillo's owns comparable restaurant base excludes restaurants that are owned by C&O, so of which Portillo's owns 50% equity. So they do have kind of a franchise model in which they own a certain percentage of equity in that model. Restaurant level EBITDA. Again, we're looking for real numbers here. Okay, this is actually kind of interesting. We have never closed a restaurant in our 58-year history. So that's a strong statement to make that they never closed the location. Prospectus summary. This is what we care about. Portillo's prepare to get obsessed. Portillo's serves iconic Chicago street food through high-energy, multi-channel restaurants designed to ignite the senses and create a memorable dining experience. Again, they are focusing on the experience. I think that's very interesting that they have chosen to focus on the experience. Again, I do want to give you, because it took me a while to find that PTLO is going to be the symbol. So PTLO, that will be in the title and the description and everything as well. All right. No matter how our guests order from us, what multi-channel means is no matter how you order, whether you're ordering through Uber, whether you're going and picking it up yourself, whether you're going through the drive-through, that's the idea. According to data, okay, that's all BS. Drive-through sales of 3.4 million in 2019 and 4.6 million in 2020 and 4.9 million in the 12 months that ended June 27th, 2021. Because remember, they can't give you the whole year because 2021 hasn't actually done. More than double the throughput of McDonald's average drive-through and more than triple their 2020 and 12 months. Okay. Well, interesting. Dine-in sales. Now, this is rare nowadays. This is actually incredibly rare. You'll see in 2019, I guess this was the pre-pandemic days. In 2019, their dine-in sales were larger than their drive-through sales. So it is more of a fast casual restaurant than a fast food restaurant. Their positioning seems to work. And if we look at delivery sales, their delivery sales in 2019, so you'll see dine-in sales of 4.4. Again, pandemic went down to 1.9, and 1.9 because hashtag COVID. We've got delivery sales of approximately 500,000 in 2019 and nearly 800,000 in 2020 and 850,000 in the preceding 12 months of the period. So you'll see that their delivery sales are growing. So these things are growing with inflation. So even though, I'll give you an example, I'll highlight, you see their dine-in sales in 2019 were 4.4 million. Their delivery sales were 500,000. But look, we go up 300,000 when their dine-in sales dropped. Again, it looks like what happened is, it's kind of interesting, they didn't really lose much. They lost some money because they had to close restaurants probably. They didn't lose much money because they had to close them for the period. They've never closed a restaurant in their history. But what they had to do is they kind of had to shift. They did a pivot during the pandemic. It'll be interesting to see what happens after, Oh, God. Look at this. This is where they're talking about obsession, that we believe a unique brand experience, passionate following, compelling everyday value proposition drives strong operating results. As illustrated by the following. Tiffy Gay, which is a Tiffle Gay, said, "I'm going to baptize my firstborn child in Portillo's melted cheese." I do remember you can get fries with some cheese. So from 2018 through June 2021, June 27, 2021, they opened 15 new restaurants across 8 states. I know one of those was in Orlando. The Tampa one was already open. They grew the operating income from $46 million in fiscal 2018 to $57 million in fiscal 2020. So operating income for the 2 quarters, $35 million compared to $23 million. They're growing. Growth grew our industry-leading restaurant-level adjusted EBITDA, which is their profit margin basis, by 190 basis points from 24.9 to 190 basis points means 1.9%. That's what that really means. Grown net income from $5 million to $12 million. Wow. Okay. So they're making money. They're making money. I think that's what's interesting. If we look at total revenue, we can see they're making money. They in millions. They're making money. They're not growing exponentially, but they are growing. Land is expensive and everything like that, but they may be able, there's an interesting pivot. There's a lot of restaurants and a lot of, small retail that has gone out of business over the pandemic. So they might be able to get some really good locations there. Again, they're in North Florida, so I don't go often, but they're I'm down in South Florida. We can see, look, they lost money. They lost $1 million in net income in half one of 2020, but they did a pivot. They did a pivot hard to more of the drive-through and other things like that. But again, remember, their main goal is the experience. If you saw the insides of those restaurants, values-driven, people-centered culture. We train great people who can turn their obsession into profession. This sounds like Chick-Fil-A. Our team members are passionate about food, love our guests, call our teammates family. This is the Chick-fil-A of hot dog restaurants. Our people-centric culture is about working together to deliver an exceptional experience to our guests. I don't hate this Vita Coco. Again, if you didn't check it, we did a look at their IPO. They're going to be IPOing the week of October 18th, 2021 as well. During the COVID-19 pandemic, we prioritized the health and safety of our team members. So we chose not to lay off or furlough any team members. Instead, invest in them with a focus on cross-training and additional skills, which enabled us to increase our capacity in off-premise channels and drive operating efficiency. So that's how they made money. They invested in their people, and again, they're gonna hi people. I'm pretty sure they have an employee stock ownership. Okay. We are proud that Portillos was recently ranked the #1 restaurant company in America's 2021 Best Mid-Sized Employers by Forbes magazine, and number 99 out of the 500 companies surveyed. Mid-sized employers, that's actually kind of cool. Iconic, beloved fans. Again, it's really giving me Chick-fil-A vibes, and this is where things kind of start to get interesting. Something we haven't talked about in the IPO so far is a NPS, or a Net Promoter Score. And essentially what that is the percentage of people that give you on a survey a 9 or a 10 versus the people that give you a 1 through 6. It changes a little bit over time, but essentially, when you're looking at a survey, if you take a survey and it says, okay, what do you give this restaurant out of 10? If you give it a 9 or a 10, you are considered a net promoter, meaning that you're not only going to love the restaurant, but you're going to tell others about the restaurant. And if you give it a 1 through 6, you're going to detract from that. And if you give it a 7 or 8, you're kind of, nah, nobody really cares about you because you enjoyed your experience, but hey. Now, you'll see if you're looking at a Net Promoter Score, meaning the percentage of people that are rating it. Now, to give you an idea on Net Promoter Score, a company like Apple is close to an 80% Net Promoter Score, NPS. This is anything, technically, anything above 1 in an NPS is good. But really, you want to have an NPS above 30, 40, 50%. Your goal is to get an NPS of 100, but you'll never please everybody because welcome to the world. But you'll see that their NPS, their Net Promoter Score, the number of people giving them 9s or 10s, is right in line with Chick-Fil-A. My healthiest and most stable relationship with an Italian beef sandwich from Portillos. So they're really focusing on how they interact with the community and their marketing side and everything like that. But if we take a look at their sales mix for 2020, they are mainly selling Italian beef sandwiches. That is their main thing. I did say hot dogs because, again, they kind of use the hot dog colors, kind of the Chicago dog colors with the pickles and everything like that. But their main thing it does seem to be Italian beef sandwiches, which is kind of like a Philly cheesesteak, but not from Philly. So that's why a lot of the restaurants are kind of looking like this. They're looking like these Italian delis, This was their original they had up at their Orlando location, and then you can see the restaurant behind right there. So again, their number one thing, 2020 sales mix, is Italian beef. Multi-channel sales capabilities. Our restaurants are designed to provide speed and convenience across multiple sales channels. Again, we've talked about this. Drive-through, dine-in, carry-out, delivery, and even catering. Or order through the drive-through, or our team members personally to you. At the onset of the COVID-19 pandemic, we quickly adapted the sales shifts and cross-trained our team members to allow us to significantly increase our drive-through sales. Hey, look, we kind of talked about that earlier. And again, I don't pre-look at this document. Average restaurant sales, and you'll see that's what happened. Their drive-through went up dramatically while their indoor dining, and they spend a lot of money on their indoor dining. If you look, do you really need to design a restaurant to look like this when everybody's going through the drive-thru? It's an interesting question, and it's an interesting question whether they could continue doing that. But do you need to design a restaurant to look like that when everybody's going through the drive-thru? You'll see delivery has grown, but mainly that projection, and that's been the same across all the fast food. I've invested in Burger King, McDonald's, everything like that. Drive-through has gone up rather dramatically. So again, we'll see. There's the Orlando, which is okay. So they have different themes for each location. So again, I've only been to one. So they have one that's 30s Prohibition, garage style, Route 66 style, diner, 50s, 60s. So essentially, that's the idea. There's nothing in this world better than a Portillo's chopped salad, except maybe Portillo's chocolate cake. Again, this Twitter, you might not think Twitter does matter here, but they're going really hard on social because of a Net Promoter Score. They're trying to show that people love their brand. So that's the goal there, Days of the week mix. Lunch and dinner. So lunch and dinner is kind of a 50-50 split. I'm going to zoom in because these numbers are starting to get a little bit small there on the screen. So we'll see lunch and dinner is pretty much 50-50, but their traffic is Friday, Saturday, Sunday. Let's see. AUV, it's Visionary Leadership Team. Okay, I actually want to read this. I want to see if there's any religious backing or anything like that. I don't know that they'd say that here. Because it's kind of interesting. Let's just see. Doesn't seem like it. Portillos. It does not seem like there's anything that it's funny that Chick-fil-A shows up there. Yeah, it doesn't seem like, and their goal was to open 600 restaurants, but we will get to that, I think, probably in this investment prospectus later. Growth strategies. We believe that we're well positioned to take advantage of significant growth opportunities due to values-driven culture, Chick-fil-A, and highly trained and passionate team members, differentiated brand experience. Again, what they're trying to say is, hey, look, all of our restaurants have a unique flair. You know, they're in the early stage of nationwide growth with 67 locations across 9 states as of June 27, 2021. From November through the end of, we're targeting opening 7 new restaurants. So from November 2020 through the end of 2021, they want to open 7 new restaurants, including new locations in Illinois, Michigan, Florida, and Arizona. They have opened in Orlando, which Orlando, I know I've referred to it a few times. Orlando's a test market. You can pretty much get anything in Orlando because people from all over the world come to Orlando to go to Disney World, to come to Universal and everything like that. So kind of everybody wants a location in Orlando now. Oh, look, we've got domestically, based on the white space analysis prepared by Foreman Analytics, we believe we have a substantial runway for growth and long-term opportunity to grow to more than 600 restaurants domestically over the next 25 years. When you're looking at all these articles, we just saw the article that said 600 restaurants. Essentially, that 600 restaurants, they're just picking and choosing from here. I want to look at the whole thing. You know, increase our same restaurant sales. We aim to continue delivering an outstanding value proposition to our guests. So again, we want to drive same restaurant sales growth. So, you know, I'm sure they probably don't have the lines like Chick-fil-A does, but if you've ever gone to a Chick-fil-A any day but a Sunday, pretty much anywhere in the nation, you go on a Sunday, good luck. But, you know, if you go anywhere but any time but a Sunday, yeah, it's a purposeful menu enhancements. We're maniacal about the quality and craveability when it comes to our menu. High quality items. Again, they're focusing on high quality, not cheap. I do know that their items, they're in the fast casual space, meaning that they're aiming at about $10 to $12 a person, not including a drink. You know, you get a combo, you're probably looking around 15 with a drink and cheese fries and everything like that. Again, it depends where you are. But my wedding doesn't have... Okay, so their cheese is a big following. And again, this comes down to the Net Promoter Score. They're trying to say that NPS, they are growing. They are profitable. We saw those things above. You know, they have that growth. So they're leveraging their... So risk. We love risk. So what are the risks associated with our business? They have continued effects from the COVID-19 pandemic. Changes in consumer preferences and economic conditions. Hey, if their stuff costs $15 and people are spending more money on gasoline, well, people are not going to go to Portillos as much, you know. Increase in our cost of, again, inflation. Inability to open new restaurants. Again, we're looking at risk. So, you know, everything you invest in has risk. If somebody tells you that you're investing in something risk-free, you tell them to go F themselves because there's no such thing. Everything has risk. I'll tell you, you know, what I think when I get to the end of this, but everything in the world has risk. Our inability to generate our marketing programs, limited time seasonal, seasonal menus may fail to generate profits. I'm sure because they're a shake place, they've got different seasonal shakes. Something tells me that there's a pumpkin spice shake. I don't know. I'm kind of one of those weirdos that wants to know if there's a pumpkin spice shake. Order online. Can I get me a pumpkin spice shake? Tampa. Inside pickup. Next available time. Oh, later. Okay. Let's kind of take a look. See their seasonal stuff. Drinks and shakes. Shakes and malts. Come on. No! Wow. Sadly, no strawberry lemon cake is probably a seasonal one there, but there is no pumpkin pie shake. Sad. Incidents involving foodborne illness, our inability to compete successfully with other lunch and dinner restaurants, vulnerability to adverse geographic, demographic, employment, economic, regulatory, weather conditions, damage to our reputation, even if unwarranted, vulnerability to changes in the digital delivery business, meaning that, you know, Uber Eats or someone starts taking more money, because they're not running delivery themselves unless it's catering. Berkshire. Again, we're starting to come up with Berkshire Partners. Remember, the interest of Berkshire may differ from those of our public stockholders. Again, it's not been addressed yet. Maybe that's organizational structure coming up. It's not been addressed yet in which how Berkshire is kind of going to be involved there. And risk factor. We don't get hacked with your credit card information. You know, they put that there. We currently conduct our business through. It's a holding company. The sole material asset will be the ownership interest in Portillo's cow. So what they're creating is they're creating a holding company. Let's see. Again, remember, there's something. It's not Berkshire Hathaway. It's called Berkshire Partners. It's an American private equity firm that's invested in over 100 middle market companies since 1986 through 9 investment funds with aggregate capital commitments of more than $16 billion. They've developed specific industry experience in several areas, including consumer products, retail, business services, communication, industrials, and healthcare. So that's who they are. They're still going to have their hands in this, even when shareholders get in. They're only offering in the high 20%. I think about 28% from what I've seen. They're only offering about 28% of the shares to normal people. PreIPO LLC member. Again, this is one where they want to have the voting shares. So you're not really getting voting shares here when you purchase this stock. Okay. Yep. So they're going to issue 20 million shares of Class A common stock, and we've seen it's about $20 a share. Again, that won't get finalized until the evening before. Oh, look, they even gave us a little graph. You know, you've got your public shareholders, you've got the reorganization parties, and you've got the pre-IPO members. So it's kind of showing you that, oh, okay, so the shareholders will have 28% of the voting interest and 60% of the economic interest. So the shareholders of this company will own less than half of the voting rights of the money that they've put in. So you should have, you know, half would be 30%. So in the voting interest of getting rid of board members and other things like that, they're making sure, take a look, you see 53, I can't highlight there, 53% voting interest, no economic interest in the Class B common shareholders. So very important to know that the market is not in control here. The initial people are still in control. Recent developments. The following is a set of fourth estimates, estimated ranges, preliminary financial results for the third quarter ended September 26, 2021. The data presented below reflects our preliminary financial results based upon information available. This is kind of interesting. Okay. So let's see how much they made. I gotta zoom out a little bit. All right. A little messy. Again, this is unaudited, so no third parties looked at that. But you can see, you know, they've made money. They made money. This is in thousands, so it's in technically millions. This is 22,000. But you'll see what they've made. Again, they're not nearly as profitable as they used to be. So that's 2020 September. In the days, those are still the COVID days. But if you're looking, we're just looking at their profitability. Looking at their operating income, restaurant level, they're making money. They're making money. Implications of being an emerging growth company. So it was founded in Delaware, it was incorporated in Delaware on June 8th, 2021, because remember, they were kind of a private company beforehand, you know, so they are a growing company, so they're not going to be audited nearly as much as a large company would be that's going public. They're still kind of a small company that's involved here. Offering, okay. Underwriter 6 purchase additional shares fully. All right, so they are making money. They do have that profitability. They do have that growth. It's an interesting growth in the drive-through. Again, they want PTLO is going to be their symbol. So PTLO, Class A, common stock repulse a risk. Welcome to Risk Factors. Summary, okay. Again, what we're looking at is, are they making money? And they are making money. Look at that. All positive numbers except that. What the heck is that? Okay. That's the COVID corner. That's the COVID quarter. Let's be perfectly honest. That is, if I remember the date correctly, March 16th, 2020 is when the poo-poo hit the fan when it comes to COVID. So, if we're looking March, so we're looking April, May, June, that's a nasty quarter. If that's the only time they lost money there, April, May, June, they lost, what is that, in thousands? 733,000? Yeah, in thousands. You know what? That's better than most people. Those numbers look good. Those numbers actually look real damn good. If they only lost that one quarter, and they did, even like they said, we guessed before. I don't generally take a look at this whole document. I just make sure it's loaded. We guessed when we were looking that, they did that pivot to drive-through business. Logical guess, but that pivot's kind of interesting. Restaurant level, again, all green. I like this. I like this. I like this. Oh, perfect. Okay, and they also pay for their employer portions of premiums of team members, total of health insurance. You know what? They seem like a good company. Not only are they a profitable company, based on this S1, again, I know it's meant to be positive. You're not going to put negative things there except in the risk factor thing. But they seem like a good company. And everybody's got that COVID-19, COVID's dangerous, COVID's going to go on forever. Because they put it there because the big bad COVID, everybody blames COVID for everything. If everybody would just get vaccinated or antibodies, I don't really care how you do it. But, COVID wouldn't be as big of a deal. Again, looking at risk factors, they could compete for restaurant sites, reach agreements on leases and other stuff like that. But the question is there anything else in here? And then we're going to take a look at the price, and I'll give you an idea of what I would like to buy. Because I think I will be buying this one. I don't see anything too negative here. Something's telling me value of our goodwill, infinite lived tangible expenses. Okay. They're coming up with that they have a lot of Twitter followers as goodwill. Again, we're getting into the little bullshit portion of this document. So, let's see if there's anything else here. I don't see anything else of value here. Looks like a bunch of legal mumbo-jumbo, which needs to be there. But I kind of want to go back to... Where is this guy? That's actually really interesting. Their day of the week mix, but that's probably the same for all fast food companies. But this is where I want to go back to. I will tell you personally, I've always wanted to invest in Chick-Fil-A. Chick-Fil-A is private. This is kind of like investing in Chick-Fil-A. It's a high net promoter score. They don't want to be called fast food, but really with the drive-through, they're fast food. It's a high net promoter score, fast casual restaurant. Personally, I like it. PTLO. Personally, I like it. They want to raise $405 million at a $20 a share valuation. Just doing some simple math. Let's say I'll throw, if I can get it around that price. Now, very important. Robinhood or Webull or no one's actually doing IPOs. So I'm not going to, it might spike to $40 a share. And, my limit, let's say, is around $25 a share. I would buy at up to $25 a share. I would buy 50 shares. That'd be $1,200. You know what? Let's actually go. It's $25 a share times 100 shares. I'm willing to put in 100 shares of this right now. If I could, I would go ahead and I would put in 100 shares. The numbers look good. Everything really looks good. Beef, burgers, and salads. Even though I wasn't getting the bad interpretation of hot dogs because it is called Portillo's hot dogs, even though they sell more beef sandwiches than hot dogs. Oh, yeah, you never know there. But I do like the company. I do like the prospectus. Again, I've always wanted to invest in Chick-fil-A. So, if this is the closest I can get to investing in a Chick-fil-A, we don't have any down here in South Florida where I am right now, but it's kind of really interesting. So PTLO, let me see when the date is exactly. PTLO IPO date. It's mid next week. Portillos, file date, proposed offering amount. Let's see if we can get the actual date. but it's mid next week. Let me see. Portillo's expected IPO date is the 20th of October, and it's going to be from $17 to $21 a share. The S1 looks good. They made money, except in that quarter, that 3 months that went April, or actually, it's not April, May, June. It's March, April, May 2020. Halfway through March 2020, that's when the world shut down due to the illness. That's when, well, not the world, that's when the U.S. shut down due to the illness. So that's kind of an interesting perspective. Other than that, they've made money. I actually like this company. I like Portillo's. I'm looking to buy 100 shares at up to $25 a share because I can't get it in the IPO because no one's actually selling it directly with the IPO. That is a quick look, I say quick, but we're about 35 minutes in, at the S1 and all of the initial filing status for Portillos, and I will let you know, coming up next week, I did find some other new IPOs that are coming up next week. Let me find them real quick, because they're kind of interesting. But yeah, there are some other new IPOs that are coming in the next week. I will bring those up later. But there's a couple that are coming up that you can actually get in Webull and other stock companies like that. I'll be bringing them to you a few days before the IPO. This is Richard from No Pants Profits coming to you. And remember, when you're not wearing pants, the only thing you have left to lose is your shirt. Have a great one. Bye.